Good morning, good evening, good afternoon, depending on where you are in this world. This is Hedge Lee, and I want to follow up analysis to my this morning's video. We had reviewed a fractal of upward pointing wedges, both giving an ABC sequence. In this case, it was an expanded flat, ABC, and it waves. And in this case, it was a flat, 335. I had said that we also have bearish divergence. The bearish divergence is also fractal related, where the RSI gives lower highs, but the price provides higher highs. The price range between this high of 10.4K and this high of 10K also enabled a bearish, hidden bearish divergence. While many thought this spike in green volume was bullish, it was still overall a downward trend, bearish. There awaits a CME gap of 3.55K, which could become a generational buying opportunity. Or could it not? More analysis is available on hedging.com. Now, what is clear and evident is that this upward wedge has broken to the downside. And when it breaks to the downside, more downside is likely to come, just like we did here. It broke to the downside and the damage ensued. But usually, when it breaks to the downside, there is an attempt to rise above, to touch or come close to the underbelly side of the lower green line before it resumes the primary down direction. That's exactly what happened here. Came up to touch the underbelly side of the lower green trend line and resumed downwards. Many have been calling the halving number 3 to be another mooning event for the price of Bitcoin, just like it did for halving number 1 and 2. However, I pointed out a significant difference between the first halving and the second halving. Note how we were in a bullish market, uptrend clearly in the halving number 1. Exactly pretty much the same thing, an uptrend bullish market for halving number 2. We are in a downtrend, and this downtrend can go to the prior 20K highs of the December 2017. This downtrend is not what was seen during halving number 2 and halving number 1. Let's also note that during halving number 1 event and timeline, the S&P 500 was in a bull market. Capital was readily available. Halving number 2, same thing, a bull market. Free capital, risk on market. In both settings, there was a bull market, but also unemployment was declining. There was no pandemic. Unemployment did not reach double digits. What do we have now? A downtrending market with a bear rally even in the equities, which will likely retest the lows if not lower, sub 1800s. But a downtrend. A global pandemic that has infected millions and killed hundreds of thousands. How is that same in fundamental characteristics to halving number 2 and halving number 1? It's a stark, rude awakening, very different conditions. More to be found on hedging.com. Have a good day.